Good morning, everyone. Today is Thursday, the 22nd of April. I welcome you all to another edition of the Vetiva Breakfast Meeting, brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. Today, I will be taking us through the recently released GT Bank Q1 results. We will hear from our equity and fixed income traders as well as our partners at Frontier Africa Reports. Before we begin, I'd like to remind everyone that this meeting is being recorded and will be shared with third parties, and is also being broadcast live on Facebook. This meeting is scheduled to hold for 30 minutes, inclusive of Q&A. However, if due to time constraints we're unable to take all the questions that we may have, do feel free to email us at research@vetiva.com and we'll get back to you as quickly as possible. So first, I'll start off by giving us a brief summary of the recently released GT Bank Q1 results. So GT Bank posted their Q1 21 results late yesterday. Their gross earnings were down by 6% year on year to about 106 billion. Interest income was down 22%, or nominally about 16.7 billion to 60.3 billion. Their non-interest income was up 28% year on year to 45.9 billion. Meanwhile, the operating expenses only went up by about 5%, and their provisions went up by about 50% to about 1.9 billion. Overall, profit before tax came in about 8% lower at 53.7 billion, and profit after tax came in about 9% lower at about 45.5 billion. The bank also reported a 1% decline in loans and net loans and advances, while deposits and other accounts went up by about 1% year on year, so about 3.6 trillion from 3.5 trillion as at the end of 2020. Overall, the result is a little bit worrying, as this interest income is significantly lower than any point throughout the 2020 period, where the bank took significant haircuts and also had to restructure a significant portion of their loans. Now, it is unclear whether or not these restructurings are the main reason for this pullback in interest income, but obviously there has been some sort of effect, and this is not in keeping with the other results that we've seen from the tier one banking space, where UBA posted increases across both interest and non-interest income. But we cannot yet draw any concrete conclusions on whether or not this will have a lasting effect on the remaining periods of the year. But after we speak to management to relay any information, we'll get back to you. Next, we'll move on to our equity trader, Sean. Good morning, Sean.
Good morning, Joshua, and good morning, everyone. We start off with a review of the performance of some markets in West Africa. So in Ghana, the benchmark index continued its impressive run with a 63 bips upward close in the session. We saw gains in the usual names, Cowbank and MTN Ghana, and with Society General also joining the gainers board to lift the market in yesterday's session. Unilever once again sustained the losing streak as the stock plunged 9.93% in the session. The market was generally positive with about 700% increase in turnover, and then MTN and Cowbank will remain our favorite name in that market, as the gain, that's a 63 bips gain, lifted the market to a 20.33% year-to-date return. So moving to BRVM, we saw another day of positive close as the composite index closed higher by 25 bips. So SMB Cote d'Ivoire also continued to lead the gainers in that market with a 7.49% upward close. Though the market closed positive, market breadth worsened in the session with 10 gainers and 16 losers. And also while the volume and market turnover also declined in the session. Year-to-date gain has improved to 1.11%, following the recent positive run that we have seen in the market. Then with market break closing negative and activity level declining, we expect some profit taking in names that has gained significantly in recent session, while markets will likely close mixed into in today's trading day. So that's it for the other West African markets. So moving to Nigeria, the ASI closed up 29 basis points. It was a generally quiet session with volume and value traded declining by 29 and 38%. We saw decent gains across the oil and gas, banking, and industrial goods sector supported the positive close. With Eternal Oil, Corn Oil, GT Bank, WAPCO, amongst others, all lifted in the session, as the banking subsector also remained positive with a 2.25% gain in that session. So the tier one banking names led the activity chart with GT Bank, Zenith, and Access accounting for 55% of the activity in the session. The market breadth was flat with 22 gainers and losers in the session, which further alluded to the mixed sentiment. So we saw 22 gainers as well as 22 losers in that session. Also, like Joshua mentioned earlier, we await investors' reaction to the results released by GT Bank. That's a 6% decline in top line and 9% decline in bottom line in today's session. We believe investors might likely react negatively a bit, but we believe that will be knee-jerked. That will be knee-jerked as they probably also look out for where the challenge is and to see if this will be a continuous, this will be sustained by the tier one bank. On our expectation for today, we foresee continued interest in the banks, especially tier one names, though we believe that will be on a cautious pattern. Investors will also look out for more corporate Q1 earnings release to chart market direction. But generally, we expect the quiet session to be sustained with pockets of crosses in mid and large cap stocks. So that'll be it for the equities market. Thank you very much.
Thank you, Sean. Next, we hear from our fixed income trader, Omorege. Good morning, Omorege.
Good morning, Joshua. Good morning, everybody. I'll start with the money market. The money market opened 50.2 billion positive short yesterday after taking into consideration overnight borrowings from the CBN. When we took into consideration the longer term repo funding, money market liquidity appears to be 123.6 billion short. This extremely tight system liquidity kept interbank rates close to CBN's SLF figures at between 12% to 30%. So our expectation for today is that the money market will trade at higher levels against the backdrop of OMO auction funding. Moving on to the FS market, there was a significant decline in I&E turnover yesterday. as industry turnover was $40.13 million yesterday, coming from the $99.49 million recorded on Wednesday. Despite this significant decline in A&E turnover, we saw a slight appreciation in the Naira across the A&E window. It traded at a high of 422 Naira to a dollar, while closing at 410 Naira to a dollar. In the parallel market, the Naira remains stable to trade at 486 Naira to a dollar. Moving on to the T-Biz market, the T-Biz market traded on a muted note yesterday with few activities on both OMO and NTBs. On the back of the extremely tight system liquidity, we saw offers on the long-dated OMO papers cross the 9% mark as cash-strapped players try to create liquidity by offering attractive levels in the market. Despite the good levels that were shown on the OMO papers, few trades were consummated because of the shortness of cash in the system. The long-dated NTBs were offered at sub 8.5 levels, and there was really no bid in the market as a lot of players decided to remain on the sidelines and wait on the bond auction results for clarity and guidance on interest rate direction. Overall, it was a quiet trading session in the T-Biz market yesterday. Our expectation for today is that the T-Biz market will trade on a muted note with attention shifting to the OMO auction that is happening today. I'll conclude with the bonds market. The bonds market traded on a quiet note yesterday as expected, with focus diverted towards the bond auction where the DMO offered 50 billion each on the maturities that were on offer. We saw some players trade their speculative views with buy interest on the 2026, 2027, and the 2045. We also saw some sell-side activity across the 2034 to 2037 maturities. At the auction, the DMO allotted 157.95 billion, a modest 59% of the total subscription, which was 265.7 billion. Most of what was sold was allotted on the 2045 maturity that received about 61% of the total allotment. The DMO shockingly increased marginal rates across the three tenors by an average of 181 basis points. The 2027 saw a total subscription of 34.69 billion. The total amount that was offered was 50 billion, as earlier said, and the total amount allotted was 22.97 billion. The marginal rate on that end was 12.25%, coming from the 10.5% it closed at the previous auction. That was an increase of 175 basis points. For the 2035, the total subscription on that end was 56.13 billion. The total amount that was allotted was 38.78 billion. And the marginal rate there was 13.34%, coming from 11.5% recorded in the previous auction. That was an increase of 185 basis points. While the 2045 saw a total subscription of 174.86 billion, the total amount that was allotted on that end was 96.202 billion, while the stop rate was 13.85%, coming from the 12% where it closed the last auction. That was an increase of 185 basis points. So our expectation for today is that the bonds market will trade sentiment around the bond auction results. And also we anticipate a further increase in rates across board in the secondary market. That'll be all for fixed income. Thank you very much.
Thank you, Amarigan. Finally, we'll hear from Temple Ashaju, partner from Frontier Africa. Good morning, Temple.
Good morning, and thank you once again for the opportunity. In Kenya, we saw that remittances for the month of March hit some $290.8 million, and USA contributed more than 55% to that gamut for that country. And that's development basically is like a 27% growth year on year compared to 228 million that they recorded for the base year. And in terms of revenue, Kenya's revenue authority has actually been striving to generate revenue more. But this time, for the month of March, they missed their target of 2.9 trillion Kenyan shillings. For the March period, they ended up collecting just 1.9 trillion. But if you look at some of the corporate stories that we have in that country, BOC gases, of which we have like an equivalent in Nigeria, or one of the branches in Nigeria, they reported the profits before tax of profit after tax rather of some 81% to over 101 Kenyan shillings. And that's of course because there was more demand for oxygen gases last year, given the COVID-19 impact or pandemic that we've had so far. But you recall as well that they have a litigation that is ongoing because there's meant to be some kind of a takeover deal lately, but there's a litigation. One of the major shareholders is taking the company to court because of that decision. In other parts of Eastern Africa, you've got Tanzania Bank, our Bank of Tanzania, floating a 25-year treasury bond. And this is something that everyone is tracking, hoping that investors will come on board, and take advantage of that. But more significantly is that in Zanzibar, the Zanzibaris are looking to float the stock markets because the president also confirmed that as part of their 5-year development program for that country. And that is something that folks are interested in. The Zanzibar National Chamber of Commerce, has really indicated interest in that development, because we understand that Zanzibar, as you know, is heavy for tourism. And so you have a lot of companies, domiciled on that island. So they're looking to float that stock markets there. The plan is also to carry out some kind of an investors education to carry a lot of the people there in that region along. We also have South Africa's consumer price index released lately. It was up rather by some 3.2% compared to 2.9% in February, 3.2% in March. And then on the Johannesburg Stock Exchange, Singapore-based Karu company gets officially listed on Johannesburg Stock Exchange main board. Karu is actually a software company, and they used to have controlling shares actually in Cartrack, which is a company that was listed, a fleet management company listed on the Johannesburg Stock Exchange before they got delisted. So now they are back on their own, independently listing on the Johannesburg Stock Exchange. One other story in the southern part of Africa is the fact that total private wealth in South Africa between 2015 and 2020 reduced by more than 25%. They said over 4,200 millionaires actually flee that country. Finally, will be the western part of Africa, where Airtel Africa, you probably know this, secured the $500 million refinancing loan facility just to refinance its 750 million euros euro bond. And then you have World Bank and Mali signing a $60 million facility to promote access to finance. These are our headlines for this morning. Thank you for listening.
Thank you very much, Pempum. We have now reached the Q&A session. If you have a question, you can raise your hand if you'd like to speak, or you can leave a comment in the Q&A or the chat box. And if you're joining us from Facebook, you can leave a comment there as well. We already have a question in the Q&A box. Long and short of it is, what is the outlook for capital markets for the rest of the year? I'm guessing December. I'll let you answer that. Sean, please go ahead.
All right, thank you for Joshua for that question. I'm not sure we're clear, but when you say capital markets, but equities market, if I could speak to the equities market bit, I think what we'll just continue to see, markets at the moment lack some level of catalyst. We are not seeing as much events to push market upward from where it is at the moment. So we expect to see market generally stay at this level. What investors will largely be looking at, which will form the outlook. We will continue to be on the we'll look at the macro space. What does FX looks like? Well, are we going to see some clarity in terms of the different rates we are seeing now? Is there going to be some devaluation, or will CBN be able to just manage and make sure that one, on the foreign investor side, are they able to take out their funds, or are we still continue to have this logjam that we have in that space? So if FX is able to, if they're able to sort out FX, also oil price as well. If oil price remains at this level, and we as a country, um, we're able to have decent earnings, that will also obviously speak to the sort of development that capital projects and all that will happen in the economy, largely also lifting most of these listed companies. So on the general macro side, we'll probably look at those two things. Then for companies itself, I think largely the companies I will probably focus on will still be the banks. They'll still be the major attraction in the market, as well as industrial goods sector. So by and large, I think what we'll generally see between now and the end of the year will be a market that will be looking out for catalysts to push, but we'll foresee a market that will largely close between flat and slightly positive. Flat and slightly positive. That's what we see for the outlook of the equities market. Maybe Omorege can speak to fixed income.
Thank you, Sean. So yes, we'll move to Omorege to give us their own outlook for the fixed income markets. Omorege, please go ahead.
Good morning, Joshua. Okay, for us, really, our outlook still remains the same. We believe that rates will continue to go up. So that has played out in a couple of previous auctions. So when you look at inflation figures, so there has been a consistent increase in inflation figures. So when investors begin to factor this interest in, so they'll always demand for higher returns for their investment. When you also look at FS, recently CBN released a circular that they are going to take out wheat and sugar from the list of the list of things that will provide FS for. So that will push that demand. People who usually import those materials, we have to look elsewhere. So they'll have to take their demand to the parallel market. So the ripple effect of this is that inflation is still going to increase. So when they take their demand to the parallel market, because of the higher demand in that space, the parallel market rate is going to increase, and that would also cause a ripple effect as those guys, when they sell their produce to the final consumers or demand more. So inflation is on a upward trajectory. And when you look at the macros, looking at what has also happened in the previous sections, the DMO has consistently borrowed more than they have on offer, more than they had on offer rather at this previous auction, though they didn't borrow much more than they had on offer, but they also borrowed more than 7 billion, more than what they intended to borrow. So the plan is going forward, the liquidity in the system is not much until June. So because of the extremely tight liquidity, so a lot of players will be cash strapped and the ones to offer their securities at very attractive levels, like we have seen in the past secondary market trading sessions. So when you look at that also, there is a tendency that rate will continue to go up. So the outlook remains the same. We foresee a spike in secondary market rates. The stop rate for the 2045 closed at 13.85%. So at the previous auction, it closed at 12%. And on the back of that, we saw secondary market hit the highs of 14%. Now that it has closed at 13.85%, the question we ask ourselves is, how high can it go now that primary market closed at 13.85%? It might actually touch 15% in the interim. So like I said earlier, the outlook remains the same. We foresee a continuous spike in secondary market rates across board, and also in subsequent auctions, we believe the DMO will continue to increase stock rate also. So that's it for us.
Thank you very much, Omorege. Dapo, I see you have your hand up. you can go ahead and speak. Thank you.
Good morning, and thank you, Joshua. So just to add to what Omorege had noted, we have a year where people don't have maturities in OMO which are periodic, and we seem to have rounded up a quarter or a portion of the Q1, Q2, Q3 perhaps, where you have strong coupon inflows to support people picking these yields. So liquidity on one hand becomes a restraint to people buying and moderating yields. The second issue will be that government funding. We've seen the news and the stories and everything around government revenue being stressed lean at this time. We've also heard a few things the CBN governor had to come and clarify. That again presupposes would see stronger issuances, which is a support to the view that rates will inch up as we continue to go along. And we had maintained from Q4 last year that we see a 2021 where rates would inch up to a larger extent. So when you start to add all these things together, and you also note what Omorege has presented earlier, you start to see that we have a year where we'll see yields inching up much more than anything. We'll have a breather somewhere in July because we have strong bond maturities in July, which will push liquidity into the system. That might moderate the bearish trend, but we believe that would only be short-lived, and subsequently we'll continue to see yields move up. That is our stance for now. On the back of liquidity, lower liquidity levels, we see rates remaining on the bearish trend, and also on the back of stronger supply from government primarily. We see a bearish trend and higher rates across both NTBs and bonds. We'll continue to observe, and if we have any changes to our view at any point, we'll be sure to bring an update.
Thank you very much, Dr. I hope that answers the question. Well, unfortunately, because of time, we are going to have to call an end at this point. Thank you very much for joining us. We hope that you join us again tomorrow for our last edition of the week. We hope you enjoy the rest of your day, and we urge you to continue to stay safe. Good morning.